In business, economists say the resilience of Singapore's services and manufacturing sectors will support the country's economic growth ahead. The outlook is in line with the latest central bank survey, where market watchers have revised the GDP forecast from 2.4% to 2.6%. But they say external risks are still a concern, such as the health of the US economy. Nadirah Zaidi has more.
Several sectors will be crucial in driving Singapore's economic growth in the months ahead. Economists say these include the finance and insurance, construction, and the wholesale and retail trade sectors. Analysts say if there is a rate cut by the US Federal Reserve in September, it could spur consumer or trade activities in these areas. The move could also lift the manufacturing sector, which performed poorly in the first half of this year.
So for the full year, we're forecasting manufacturing output to increase by 1%. So that's very low. But the important part is that activity is likely to rebound.
However, economists have also sounded some concerns. They slashed the growth outlook for the accommodation and food and services sector, even with big events like the Singapore Grand Prix taking place in September. They say the strong Singapore dollar have turned away tourists. There's also China's push for internal tourism, which could impact visitor arrivals. Consumers here are also spending less as cost of living increases.
I would anticipate that the numbers be relatively muted, but it still means that there's still potential for further normalization for Chinese tourists to come to Singapore. And the growth rates will be modest, providing small support over the coming years as the figure continues to normalize to pre-pandemic levels.
Market observers also expect inflation to ease this year. They are trimming headline inflation forecast to 2.6% compared to 2.8% previously in June.
Food and energy prices are moderating internationally. So that's helped by the fact that the supply has been relatively abundant, and then demand is still relatively modest in terms of the growth.
With the slower inflation, prices could stabilize a bit, or even if there's increases, the hope is that it would be slower compared to what we had experienced over the past few years.
Despite the rosier outlook on Singapore's growth, analysts say they're closely watching other economies like the US and China. Geopolitical tensions could also cause some downside risks for Singapore's economy.